All right. Well, figure get started. Let people join as they come in. So I asked a question earlier. Basically, uh, basically the question is, what are you having difficulties with? What do you want to learn more about? And some of the answers that I got back were pretty awesome. So I wrote them down. Pretty much all the answers were actually pretty great. I wrote a lot of them down. I don't think we're going to get to them all today. I figure we'd probably try to do this over multiple weeks or episodes or something like that, so to speak. So a few things that I definitely wanted to touch base on, though, especially in such a volatile market that we're in, is admitting defeat. And it's something that's pretty hard for everybody, me included. It took a lot of mental twisting and turning to get to be the point, or get to be at the point where I could say, okay, fine, I'm ready to let go of this. Yeah, it sucks. I am doing it at a loss, but fact of the matter is, a $20 loss is way better than a $50 loss because it's that much harder to come back from. For those of you that have already gone through school, those of you that are going through school, regardless of the level, the one thing that I always remembered was that that one F was way harder to come back from than a C. Like one F took like four A's to come back from. I don't know why. I don't know how that really works out, but it's crazy. It's true. Just for some reason, the weighting behind the F really ends up screwing you, and it takes you forever to come back from. And there's a chart that really shows that pretty well. See if I can find it right quick while I talk. Multitask, but basically, it's like showing you that a 10% loss is okay to deal with, but then when you're talking like a 50% loss or 70% loss, maybe somebody else can find it for me so I can focus on talking. And put it in the main chat if you can. But the bigger the loss, obviously, the harder to come back from, where you need to end up making a ridiculous amount of money if you have a 70% loss compared to a 10% loss. And it's really profound when you look at it that way. And in the inverse, we also in the chat have had things come through in pictures where, if you can have a 7% day 180 days out of the year or something like that, you can become a millionaire. So imagine what a multiple 10% days can do. Maybe it doesn't take you 180 days, compounding, it's only 100 at that point. But the fact is that if you can take the emotion out of trading, you're going to be a much better trader. I think it's going to turn around, mentality. Oh, can y'all hear me? Yep. All right. I think I've given it enough time. Everybody good? Everybody hear me?
Yeah.
Perfect. Okay. I was hoping some more people would join. Looks like we got a few more. So cool. Okay. So I wrote down a few things when I asked the question earlier about what people wanted to learn and get more information on. And I have about 4 or 5 different points. I really don't know if we're going to get to them all. I don't want to make this super long. I'm hoping maybe we can do multiple 30-minute sessions, kind of like sit-down powwows. Ultimately, in the long run, I'd like it almost to turn into some kind of group discussion to focus group, like a counseling session or something where we're sitting in a circle, so to speak, a virtual circle, and we can all kind of talk about what we were dealing with in the trading world. So, I mean, I'll kick it off, but the 4 main things that I wrote down, and the definite one that I really want to talk about right off the bat is admitting defeat. Which is when we sell something at a loss. It doesn't mean that you actually lost, but we definitely end up selling something for a loss, and I'll explain that mentality here in a second. Another thing was position sizing. Some folks wanted to really be able to pick up a little better on intraday trading. And the one thing that I always get asked, personally, not usually in the chat room, but personally, is about finding the things that are going to pop, making a watch list for the day, picking the right options, stuff like that. And by the way, if you're not on mute, would you just go ahead and mute yourself unless you're going to talk? That way we don't have that background noise. I am recording this, by the way. It will be up on the YouTube channel, and I'll put a link out to it once it's uploaded as well. Okay, so the first thing I want to talk about is admitting defeat, like I mentioned. This one is all mental and emotional. It's hard. I get it. I've been there. I look at a trade and, damn, I just spent $200 to get this option and it's dropping, but I really think it's going to turn around. That's kind of the mentality that you have when you sit here and stay in something too long. And then next thing you know, you're down 10, you're down 20, you're down 50. But you do think it's going to turn around. Then you're down 70, and then you say, screw it, I'm out. That's when things start catching up with you. So what you really need to make sure that you're doing is trying to, I'm going to go ahead and mute some people here since I hear some noise. There we go. What you're then trying to do is climb out of a hole that you've dug by letting yourself stay in a trade too long. The one thing that I always think about is when I was going through school, that one F I got was always harder to come back from. I had to get like 5 A's on tests to make up for one F. And that never sat well with me. So I was like, well, why the hell am I doing this to myself on trades? That same mentality. It's just easier to not get that F, to study a little bit harder and get a D even, or a C. So think about that when you're making a trade, especially when you think it's going to reverse. I mean, like we see crazy crap happen like today, right? Like we start super low because Ukraine gets invaded by Russia, and then the next thing you know, all we are doing is going up the whole damn day. We have some pullbacks here and there, but it just goes up. Everything ends up going up and becomes very bullish, even crypto. That's not normal by any means. So why should you have the mentality that something should reverse regardless of what's going on in the world? I mean, one of the things with the strat is we look at price action, right? So we look at patterns. We look at things like 2-1-2s, 3-2 reversals, rev strats, 2-2 reversals. I mean, we literally live and die by candlesticks, not by what's going on in the rest of the world, not by if we think something's going to turn around. If you can really ingrain yourself with the mentality that I'm sitting here looking at a specific time frame, and if this next candlestick ends up being a 2 down, my setup has turned bearish, whereas I was expecting it, or I have calls, like I should get out of my calls now before I lose my crap. We get in on a strat play, we should exit on a strat play too. So again, we have the bullish strat plays and we have the bearish strat plays. So that's the first bit when you're thinking about something and trying to play the mental game. Could you please unmute me? Yep, no problem, Rickster. It's hard to tell. All I see is people that are unmuted, and then we hear a bunch of noise. So then I don't know who's making that noise, so I just have to mute everybody. But anyway, so Rickster, you're unmuted now. Yeah, so that's the the mentality that you have. So the easiest thing that I've decided to go with, right? Like, I mean, you can sit here and watch one ticker. Let's say I got into Apple, here on this 2 candle. I don't know why I would do that. Maybe like I decided to get on the 2-2 reversal. Let's go with that. The 30-minute, I decided once it broke 157.30, we have a 2-2 reversal. I like that green, that 2 down candle that's green. So this thing turned bullish. So let's get up on the 2 up. So we get in on this 2 up here at 157.30. So it breaks over it. We like it. We like it. We like it. Now we're moving on to the next candle, and it kind of comes down back to our opening or our entry, and then the next candle is coming down. So we have a 213. This has turned bearish on us with this setup here, a 213. Okay, so well, guess what? We should probably be getting out now, based on our honestly the same the same area that we got in at. So this is completely turned around on us. We shouldn't be sitting here saying, well, maybe it will come back, maybe it will come back. Sure, it did, right? But what we've done is minimize our losses. Like, let's say we're buying the underlying. So we get in at 157.30. Well, we got stopped out at 157.30 as well, and then we can get back in on a different setup later on. So we got stopped out for absolutely no loss. So that's the beautiful thing about it. Now we have so we go to 3, we have a 2. Now we're looking at a 3-2-2 reversal. So we're going to put our line in the sand here saying we go north of this, then let's get in on it. So we do. On the next candle, we go 2 up. Okay, well, it does come back in, but we're not stopped out yet, right? And we haven't been stopped at 30-minute candle. So you're probably going to want to, if you're buying the underlying, definitely set your stop loss down here. If you're going with options, that's really based on your risk. I typically go like 20 or 30% stop loss, just based on, whatever the option was. It gets a little more, it hurts a little bit more if you're, talking, 3 figures in your option trading. But if, you're sitting with a 20-cent option that, costs $20, then you don't want to necessarily do a 20% stop loss, because you're going to get stopped out with a 4-cent move. So you don't want that. So anyway, we have our 2-2 in, and now we got back in and we just rode this baby up, right? Like that's the thing with the strat. It's a well, if the play doesn't go in your favor, get out and get back in later. You live to play another day. And that's the mentality that you should be having when you get into a trade. So you shouldn't be fearful of getting stopped out and missing the move. You should be more fearful of losing money and then not having enough money left to get back in the play later on. Now, there's a lot of different ways that you can go about and do this, right? The first one is obviously sitting here and staring at a chart. I like to, some things that if I'm only trading one particular ticker at a time, I'll put my line in the sand. So again, this 3-2 reversal here, my entry point's here. So, and I'll actually end up saying my exit point's going to be the bottom of the same candle I entered on these larger time frames, like the 30-minute and up. So at that point, if I ever get below 156.70, and I'm again trading the underlying at this point, if I ever get below 156.70, I'll go do a manual sell at that point. Now, in this case, we never did. It just kind of kept going up. Now, what I'll do as we move on, let's say, again, my entry point was here. So we're up at this candle now, or we'll say this candle, this 2. Well, I'll go make my stop loss the next line, or the next candle, the low of it. So at that point, I know that I'm staying in the trend. It's always going to be the low, the low, the low. And there's a YouTube video I made that kind of goes over this, especially when you're trading like the underlying and you don't have a lot of the Greeks going against you when it comes to trading options. It's easier to stay in a trend this way. You can stay in a trend with options too, don't get me wrong, but if you're looking like the 5-minute chart playing a 0 DTE SPY call, this sideways movement right here is going to kill you just from theta, believe it or not, like especially on a 0 DTE. 30 minutes of stagnation or consolidation to the side is just going to completely take you out. You're going to see, even though nothing really happened to your price wise, you bought something for $1. Next thing you know, an hour later, it's gone nowhere and it's only worth 80 cents. So now you're lost 20% of your trade. So you'll get stopped out. That's, something to consider when you're dealing with options there. However, if you're buying the underlying, it's pretty easy to stay in the trend when you look at it like this. All right. So again, there's a few ways to do that, right? The first one is the manual option, like I talked about. The second one is, when in Thinkorswim, and I don't really know much about any of the other platforms. I know Robinhood, you really can't do this in. They have some horrible thing like a stop limit, which I've messed with it a few times and it still confuses me to this day. And I've made a video, I believe, on advanced orders, but you can actually go and click on this little gear over here. And and you know, set some underlying things that you want to do. So in this case, like let's say we want to go ahead and buy the 162.50 call. It's going to expire Friday, and we want to do it based on the underlying price. So we can go ahead and put that stuff in here. So we say the mark or the ask, the bid, whatever is over, you know, or it hits our threshold of 167 or 162, you know, whatever the price is that we want to enter. So now my order will execute. We're probably going to want to put a market order in though, because if we try to put a limit order in as it goes up, that's going to be a little weird. At least with options, you can't really do that, right? We can't predict what the bid ask is going to be once we get to our underlying, unless you're just amazing at math. But they change, IV changes, you know, it's pretty much impossible. So that's if we want to get in on the underlying. Now, if we wanted to say that we wanted to get out, right? So we're going to go ahead and put our buy order in. We're going to say $1.36. Now, what we also want to do is go down to this advanced order area and do a bracket order or a one cancels other order. So we can either just go like one trigger, first triggers all, first triggers OCO. So then it's just going to, one will cancel the other. We can right click this guy. We can click on create opposite order. And this guy's going to be our sell order. The red one, the green one's the buy, the red one's the sell. Now I can go over here and say my stop is going to be, and you can put an actual price in there. You can put a trigger, which is then a percent. Click the little guy to go to percent. And you can say, if this drops below 20%, that's going to be my stop loss right there. So 13, so this gets to be 20, this goes down to 20, loses 26 cents in value. That'll be my stop out. Right now I go to confirm and send, and that would put my order in, and that's it. Right, that's how you do a one cancels other order. And now at this point, I've taken the emotion out of it. Don't go delete these things after they're in, after they're submitted. You know, you bought your option. This automatically now will be in effect until it happens. And if you want to go one step further and truly take the emotion out, you know, again, the other piece about emotion is, oh, I think it might go higher. I think it could go higher. You can also create a duplicate order and then say that you want to sell this. And I mean, again, you know, do like you can do a decimal, like the plus minus will give you a decimal. So we bought it for 136. Let's say we want to sell it right off the bat for 166. So it goes up 30 cents. We want to go ahead and sell it. Boom. So as soon as it hits 166, a sell order. Ooh, my mouse just moved like crazy. A sell order will go in and we'll sell it at 166. So that's pretty awesome, right? Like completely takes the emotion out of this whole trade. The other option again is, you know, change it to a percent if you want to. We want this to. So we want to deal with 20% risk, but we want 40%. So we're essentially putting a 1 to 2, a 2 to 1 risk reward, 1 to 2 risk reward. There we go. So risking 20 to get 40. So that's the easiest way to take emotion out of this whole thing. Whatever the equivalent is in Webull or those other, you know, platforms that y'all use, I would definitely encourage you to look into it, because getting the emotion out of what you're doing is the first and easiest way. I mean, really should be the only way to trade. I really do think once you start trading with emotion, and I've been there, I do the same thing. And you know, 2 weeks ago, I was getting so frustrated with myself because I knew exactly what I was doing, and then I kept on doing it, right? Like that's the definition of insanity. Oh, I should also mention, once you make something like this, you know, where it's all complicated and complex and whatnot, save it as a template. So in Thinkorswim, you can go over here and just say save custom order template, and you just give it a crazy name. I have a few, like, you know, I'll put an order in with a 10% trailing stop loss, or I have a 30, you know, plus 30 minus 20 market order. So again, like that's a, you know, kind of a 1 to 1.5 risk reward. But you know, you can put all these, you can make yourself a template, which then becomes so much easier to deal with, because at that point, let's go ahead and cancel this. Let's delete that. At that point, if you wanted to get in on this, I could, you know, right click it, go to buy custom, and then I could just select my template. So right there, now I'll get my market order in, and my stop loss order will automatically be there as well. And then, you know, confirm and send, and boom, it's off. So I I really encourage you to look into having automatic stop losses set, even automatic sell orders set, so when you hit your price targets, and saving things as templates if you can. There are ways to do that in Thinkorswim Mobile. I don't use mobile. I can't trade on mobile. Every time I trade on mobile, I lose money. So I don't trade on mobile. That's one of my rules. So yeah, I'm sure you can Google that one though. Okay, so any questions there before we move on?
I got a question. If you can go back to where you were talking about with the option and giving yourself a buffer for the stop loss to stay in the actual trade longer.
Okay, so like where was I at? The charts?
Yes, you were in the charts and you were saying that the underlying you would maybe just go candle by candle, but
Yep,
in the actual option, 20% could be a difference of 10 cents, and then you're out, and then the trade actually continues, in this case, in the Apple upward.
sure.
And sometimes the options you got to give yourself a little more because, like you said, it was a $20 stock option, like a CCL. They're relatively inexpensive, but if you put 15% or 20%, you can be out, at a very low dollar amount.
Right. Okay, so yeah, that one's, I mean, that's really all math related, right? So the first thing I always look at, take the 165, the Apple ones. Actually, we'll go to CCL. That's probably going to be better. So at the money, we're sitting here looking at like the 25. We're going after calls, so we're looking at the 2050s. So if your risk tolerance is 10%, right? You have a 10% stop loss. You bought these for 47 cents. So your 10% is going to be a 4 cent move. We'll round up. We'll say your 10% loss will be a 5 cent move, right? So if these guys go down to, if the mark, I should say, goes down to 42, you're going to get stopped out. Now look at the bid ask spread, right? You already have a 6 cent bid ask spread right here. So you're going to buy in at 47, but the mark is at 43, or the last is at 43. So you're 1 cent away from already getting stopped out of the order that you just got in at by setting an automatic stop loss, right? So of 10% in this case. So you always have to kind of keep track of definitely what the bid ask spread is. And don't get me wrong, like just because it's cheaper doesn't mean that you should say like I'm going to make my stop loss 50%, right? So if this guy goes down to 40 or 23 cents a contract, then I'll get out. Like, no, that's still the same mechanics as larger orders should apply. It's just you need to be more cognizant of what you're dealing with, especially when you're talking about these moves. Now, the thing that I will say, and this is kind of where Delta comes into play, but when you're dealing with something like, so Delta is basically, if the underlying moves $1, you're going to gain 50 cents in value. That's kind of what Delta is telling us here. So that also means if it moves down, you're going to, obviously if it moves down $1, you're going to be losing a lot of money too, right? Like Delta is kind of Delta comes into effect here. But the thing that I always look at, again, when I'm looking at like a lot of these smaller guys, the buffer for me is probably going to be like a 30 or a 40% loss. Now if I see it, if I'm looking at the chart, and I'm looking at this right here, a 2-2 reversal on a 30-minute, again, I'll put a line in the sand. But if I'm looking at a 2-2 reversal, well, that barely touched. That's hard. So I'd probably look at the next 3 candle here. I really want to see like a breach of the line in my sand, right? Like somebody's come across it. Now, if I'm looking at this, but the option has only moved maybe 10 cents at this point, and I'm at, my stop loss is, let's say, at 12 cents, which would be like the 30% area. Then I'd probably say, you know what, I just see this going down a little bit more. Video or screen share. So the buffer, it really has to be based on number one, the spreads, right? Like again, you bought in for 47, it's already trading at 43, so you know that you lost you lost 4 cents if I could do math right now, right off the bat. So you're gonna get, if this moves 1 more cent in the wrong direction that you bet on, you're gonna get stopped out. So you gotta take that into account. Number two, again, the small amounts, you already need to kind of inherently move up your stop loss. So what I'll typically do on these small things, like I said, I'll either go with something large like a 40% stop loss, but what I found to be a lot easier, especially since I've started trading a lot of these like the blue chips, the Dow type stocks Monday through Wednesday, because they're a lot cheaper. I've started going with actual setting a stop loss, like a hard cash stop loss, right? So back to the bracket orders here. So instead of putting a percentage in, I'll do like minus 10 cents. So now I'm not necessarily saying it needs to be like a 10% drop, a 20% drop, a 30% drop, or anything like that. Or minus 10, I guess I should say minus here. So I'll say like it needs to, I want this, if this gets down to 37, I'm getting out. Right? Because again, these guys don't move that fast either. Unless they're tanking, they don't really move that fast. As far as like the options go, especially because they're playing weekly, especially like CCLs and stuff. You're playing SPY, on the other hand, very different story. The zero DTEs, they move quick if they're going in the opposite direction. But when you're talking about a weekly, leading up to that, expiration Friday, they're going to move a little bit slower. So the buffer really almost needs to be, and that kind of goes hand in hand with something I wanted to talk about a little bit later when you're making a watch list. But the buffer also is a lot easier to figure out when you play the same kind of stock all the time. I mean, for me, I've come to find a few. I guess that's a good segue to the next one, right? Kind of building a personalized watch list. We have a lot of tickers that go through the strat setup bots and the 50% bot and the breakdown bot. But what I really look for in those are just a few actual tickers. Now, if I see one that's interesting to me, like CCJ was today, right off the bat, like that was interesting. So then I'll look at that and say, well, what just happened here? Why was why do we have a massive three, another one, another one, another one? And then I got very interested in what was going on. And then I, kind of watched it come back down, but then jump back in once it bounced off the VWAP. Now, again, why did that happen? That's what makes me curious about things. So, I've played CCJ here and there, but I know that the spreads suck. I think we need to go further out now. Actually, they're a lot better than they were this morning, but the spreads suck. I mean, this is, a 4 cent spread. This morning they were like 60 cents. So that's something that I needed to consider when I was getting in. So I'm not going to put my order in. This is probably a better example. I'm not going to put my order in for 145. I'm going to get it closer down here to like the 130. So I think I ended up putting it in for, let's say 132, 133. So if there's a little bit of a pullback, I'm in. Or even if there's just a normalization of the spread, I can get in. It might not even pull back, right? Spreads, as things kind of consolidate and the buyers and sellers start meeting in the middle a little bit better, the spread will kind of condense itself so that you're not dealing with something so spready. The other bit of spread that you have to take into account is one of the reasons that things are spready is because you don't have a lot of open interest in volume. So like this guy that's we'll go with this one. Open interest is 42, but there's one volume. So only one contract has kind of changed hands here. There's 42 people holding it, but why would you get out at this point if you're holding something so deep in the money? But 42 contracts are out there. So if anybody were to put this on, they can there's a 15-cent spread that they can play with here. Like if I were to buy this right now, that's ridiculous. So you have to consider those things when you're looking at the buffer that you want to do, how big the spread is, where the mark is, because if you're setting an order to get out based on the mark, um, mark hitting a certain, because that's typically what a percentage order will do, right? It's not when they tell you how much your option contracts are worth or your underlying is worth, it's based on the mark. Or not based on the ask, I should say. But when you're setting your stop losses and things like that, you want to do it based on like either the mark or what you're able to sell it for, which would be the bid, right? So, you just got to be able to understand those mechanics when you're setting your buffers. And again, I really do think a bit of that is sticking to a few stocks that you like, that you understand the movement of, that that if it's moving 3 cents in this direction, the underlying is moving or 3 cents in one direction, you'll see maybe a penny decline or incline. But if it moves a buck in the direction, you're going to see what you want to get out of it, or you're going to get stopped out. Now, on the flip side, I should say, when you are looking at the things like with bigger contracts, it works out a lot better just to, set a percentage stop loss. In this case, my general rule is if it's over like 80 cents for a contract, I'll start setting percentages instead of hard dollar amounts. That's just me, but like I said, you need to get in your comfy spot about where you want to set something and how you want to do it, whether it's percentage based or actual decimal based. Any other questions?
Should we go over like an execution? I've been always curious on how like you do like entries, let's say on like a higher time frame. More so like so for example the Apple trade that you were like going over earlier.
Mm-hmm.
On the 30-minute, let's say it wakes up and passes. So like yeah, let's say that specific candle right on the 2-2 reversal.
Okay, so here, yep.
Yeah, so let's say you enter at the 157.3. Now, let's say you do that on the next two because that's when Pierce is in, closes up. Do you do that right away as soon as that happens, or do you wait for some kind of like do you enter on a lower time frame?
So, tight stops and I are kind of in the same territory here when it comes to after about 10:30. I really start disregarding like the 5 minute and the 15-minute time frames and really start looking after I have a few candles built here, right? Like I'll make my entries on the 30-minute or higher. Now my exits, on the other hand, I'll look at the smaller time frames because I mean, like, while this looks like a nice little arc here, what it really is more of a redonkulous consolidation happening, right? Like just kind of back and forth, little wavish. So, my exits will really it really yeah. So my exits are either going to be based on the 15 and the 5 in my book, right? Like I like to see the move as it's happening. So if my entry's here and I'm going down, now if I'm coming back down to VWAP, because I really track the VWAP on the 5, even though the line's pretty much the same all the way across. If it comes down through VWAP and it starts looking ugly, then I'm going to get out. But really, what I typically do, especially on my exits, for a loss, I really just stick with my stop losses and my trailing stop losses. Now, the one thing that I will do when I come and put this order in, right? So I'm going to say, let's say we're going to just go for this gap fill here. So we're going to, say 159, 75 is my price target. So if I'm getting in on here, I'm going to probably go with like the 159. Yeah, this is one thing about Apple. Let's see, where was it? What price were we sitting at? 157.3. So I'll probably get an at the money call. I don't know what it was at the time. Let's say, it was yeah, let's say whatever, it was like a buck 75. So I buy the buck 75, um and I will immediately, because again it's over like 80 cents, I'll go and set like a 20% stop loss. Um so if it moves up, great. And once it gets to that point, like when I initially set that 20% stop loss, that means that I'm risking what, 34 bucks to make that play. So if it's if I ever get to the point where I'm at break even, so if I ever get to the point where my option contract is now, if my stop loss should be where the contract is now, like, so we've moved up enough to where the 34-cent offset should be back to where I bought the contract at. So if I bought it for 175, we're going to be sitting at what, 204. What is it? I don't know math anymore, but it was, let's say roughly $2, right? So that's 25. So we're sitting at, we'll say it's at 205. So if I'm sitting at 205 as my contract, so I'll go set my stop loss to what I bought it at. Actually, probably like +2, because I still have to pay some commissions, right? So instead of 175, I'll set my stop loss at 177. Now, at that point, you have a choice to make. You can either say, I'm going to go and manually continue to move my stop loss tighter and tighter, or up and up. You don't even have to get tighter, up and up and up. Or what I do is I set a trailing stop loss, because I'm also working during the day. Like, people hit me up on the phone, or not the phone, the computer, and, you know, conference calls and stuff like that. So I can't sit here and manage these things. So I prefer the trailing stop loss, to where, as this moves up, if I have a 20% trailing stop loss, I'm already going to make money, right? Like, I've moved my stop loss to, um at least get $2 or $3 out of the play, pay my commissions, and I'll walk away with an extra buck. So I'm okay. Like, I didn't go red on the trade. That is officially green. Now what I'll do is I'll throw a trailing stop loss in there, so that I know, again, it will continue to move up, hopefully. But right here, if I got in here, right here, I might have gotten stopped out. It just really depends on, how aggressive with, 3 bars tend to, you see a kind of a spike in movement and, dollar change pretty quickly. But the I might have gotten stopped out having a 20% trailing stop loss if I set it right here. So I mean, that's something to keep in mind. So now, again, is it okay with, you got stopped out, you didn't really lose any money. Now maybe you want to play the 2-2 reversal again, and at that point you would have just rode it all the way up, or do you want to have a, larger stop loss, and then, I mean, it could have potentially gone, down, 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 all the way down to here, let's say, and then you've, you know instead of losing, or instead of gaining $2 out of the trade, you've lost 20. It's really up to you what you want to do there. I'd prefer to walk away with, like, clean hands, like the blackjack dealer wiping him off, when he's about to go, take his, lunch break, and then get back in later. Um, but yeah, so I mean, that's how I would have executed that. So does that answer your question?
Yeah, I think more so it's just like when you enter, it's just like you saw the price spike up, and you're like, okay, I'm in, kind of thing. Like for me, I usually just wait for a candle close on the 2 to 5 minute if I'm getting in. So that was what I wanted to clarify with you. Do you, as soon as the candle on the 30 minute spikes up, passes your price, like the trigger to get in, you just get in? You set market order in or limit order, like that is what I was trying to get.
Yeah, I mean, and that's one of the things about the 2-2 reversal, right? Like, you're not sitting here waiting for a 2-1-2, or a 2-1-3 or anything like that. I see a 2 develop. I like the green. I like the 2 down. That's green. That means buyer, like, oh yeah, and by the way, we just bounced off VWAP here. So, like, those are 2 solid, confirmations to me that the next candle is going to go in my favor. Bouncing off VWAP, it's a 2 down, and the buyers took control of it. So, yeah, I mean, to me, that this is like a no-brainer 2-2 reversal. Like, I definitely get in on it. Now, again, this 3 bar sucks, because, yeah, that means the trade didn't go in your direction. only for it to eventually go in your direction. But this happens countless times. I mean, you can look at any graph or any chart on any day, almost on any time frame, and this kind of thing happens more often than not. And I know we were talking about it in the chat, but I mean, I'd rather walk away with $2 than lose 20 on a trade because I, decided to stay in it, and I feel very unlucky all the time because like if I decided to stay in this trade, if I were to take it, if I decided to stay in this trade, this is when it tanks. Like, I mean, it's like Murphy's Law for me. I don't know why or how it even works like that. But if I decided to stay in this trade after seeing a 3 candle and a 2, and this would have gone down an extra $30 before I felt the pain enough to say, okay, fine, emotionally, because I'm emotionally invested in this, it's time for me to get out.
Got it.
And I know we all have that same pain because we've talked about it.
Well, I do. I do. That's why I find 2 different strategies to like get in on the strat and also like add in on the
Uh-huh.
make sure I catch the play if I wanted to.
Definitely. Yeah, the VWAP thing is the VWAP line is very powerful. Tight stops turned me on to that. I strictly used to just look at strat patterns and candlestick psychology, but knowing the patterns, the psychology, and then the VWAP level, like it's amazing how how it all really works together. Okay, so that one topic took a lot longer than I expected it to. So let's see, in let's say 10 minutes or so, I'm gonna go over the next bit, which is intraday strat plays, because I don't think it actually requires a ton of discussion. Again, I already kind of explained how I go about and really look at what I really stick to a few different tickers. Again, when it comes to technology, I'm looking at like Roblox and Microsoft and Apple. Those are the really 3 that I stick with. I know a lot of y'all like Facebook and stuff, but I can really only afford Facebook on my small account that I play with on Fridays. So during the week, I can't really even afford Microsoft until like Thursday. Apple I can afford all week. I mean, and that's because I continue to take money out of my account. I don't just let it keep going, because as we talked about again in the chat, I saw this earlier and I just kind of laughed because it happened to me all the time. But I found that if my account gets over like $1,500, I start making stupid decisions. And so I found that the best way to not make stupid decisions is to get to about $1,500 and then transfer the money out and restart it with $500. So I'm basically doing like a $500 account challenge every 2 weeks or so. So yeah, anyway. Plus I trade stocks for fun, not, as a like way to pay my bills. But so, okay, intraday, that's what we're talking about. So there's really a few things that we have here. Number one, again, find the tickers that you like. That's really going to help you. And the reason why I say that is because what you're going to want to do during the day, like pre-market or after hours, is you're going to want to come in and start charting your levels of your tickers here, right? So if I know that I have an interest, I like the Apple setup today, I'm going to come in here and start charting my stuff. Like maybe we'll have an Apple will go crazy up again tomorrow. So, my entry will be here. My price target one will be there. I'm sitting here right now, just straight up looking at the daily chart. So I'll go ahead and make some lines, put labels on them. And I'll even say the opposite way too, because nowadays we really don't know which way is gonna, where things are gonna go. Based on the news. And I tell you this because what's really important here is you have your levels, because you don't have a ton of time to be able to make decisions when it comes to how you want to get in, or where you, especially if you're buying options, where your price levels are going to be. So if I see now Apple is going to be going down, my entry is going to be 150 below 152. looks like the next price level, the price target is going to be 150.99. So am I going to want to, knowing that there's a level of support here, I'd rather be safe than sorry. I want all the chips in my favor, as many as possible, right? So I'm not going to go buy, a 145 put. And now the one thing that I always hated about Apple is their freaking puts go in $2.50 increments. So, or 250 increments. So, I can't go buy. I guess I can buy one. I mean, I can buy a 150 put, right? But like, thing is, 150 is not in the money. This needs to go to 149.99 for me to be in the money. I like things in the money. But so what I'd probably be looking at is the 152. Now the problem with that is by the time it gets to my entry point, I'm already that particular put that I want to look at is already going to be in the money. So that means it's probably going to be in the 110 to 134 range already. That's okay. It's not horribly expensive, but that's something that I have to consider. So my point is though, know your levels, chart them out again, get a few that you really like ticker wise, and do this kind of exercise for your own benefit so that when you decide to get in a play, you already have the things charted out. You can quickly look at the chart and say, okay, cool. My entry is 152. My price target is 150.99. I don't want to go get something too far out of the money unless you like risking it. I don't. I play at the money things because I always play weeklies. So yeah, that's really kind of the first thing I would do before you even consider playing something intraday. Now, if you are quick enough, like CCJ wasn't on my radar today. But what I saw was it move. Actually, the 50% bot kicked this guy out somewhere as an alert pretty early on in the morning. But then I saw it go over the 15% or over the 50%. So I set my first price target to be like 120, 21.28 or something like that. So right off the bat, I said, okay, I'm going to be getting the $21 calls. So that's what I did. I went and bought some $21 calls at they were 70 cents or something like that. Okay, great. So then I just quickly went through and did this so that, okay, now my next price target is 21.60 and I sold everything I had at 21.60. And then I bought in again. That the thing is, be quick about your levels if you're going to do them intraday. If you're going to use the bots for things that weren't even on your radar, it's really important to have these levels instead of just saying I'm going to go in and get something that looks cheap. Why? Again, if it is a weekly and it moves in the different direction, so let's say you jumped in right here on this. I mean, I don't know why you would have. It's a 2-1 on a 30 minutes, so there's really no entry here. But let's say you decided, well, damn, it's gone up so much today. It can only go up higher, I bet. I'm going to go get a 23 or a 20, a $24 call, let's say. Well, number one, this is an abnormal move. Again, you got to be able to look at the chart. And that's where DTR and ATR comes out, right? Like ATR for CCJ was the average true range. It moves $1.16 in a day. That's underlying stock, not options. That moves $1.16 in a day. So this is abnormal stuff. Turns out, now I want to know why they were moving, but they do uranium and they're a Canadian company, and Russia being sanctioned, they just went crazy because we need to get uranium from somewhere else now, not Russia. So so you see that they moved $2.55 today, so that's a very abnormal move for them. But I had my levels in here, and again, my levels, this is where knowing the DTR and the ATR, I figured 21.60 was probably the max it was going to move. So that's why I did not go with the 22s, because that would have been over a $2 move. So know those levels too, DTR and ATR. And this is a strategy here by Ripster. I think it's actually there's also one built into Thinkorswim too that you can always get too. But yeah, just know your levels. So that's the second bit. And know your ATR. I guess that was the second bit. The next bit is have a plan. So if you see that something's about to go 2 up that you have on your list, again, I really have been looking more so at the 50% and the breakout channels now. But like, okay, AMC's on my list. I see that the bot says it might be going 2 up soon. So what's my game plan here? So wow, it went 3. Craziness. So what does that mean for me? Well, that means, well, number one, the bot probably told you earlier it was about to go 50%. So that's cool. So hopefully you got into the play at the 50%. And then it told you that it's about to go, up on the day to make it a 3. So again, have a plan, know what you're going to do, draw out your lines, your levels, I should say. It's going to be invaluable to you. I mean, you don't go into a test in school. I mean, hell, you might. I don't know, but I never went into a test completely unprepared. I might not have studied, but I at least got the cliff notes from somebody else, or I knew who I was going to cheat off of, or something, right? Like, there's some sort of plan you got to have, and this is your plan. Knowing your levels is your plan. Knowing that you think that, or knowing that the next price point for AMC is $17.07 when it's currently sitting at 16.32 at the 50% mark. That's important to know. I personally wouldn't want to go get like an 18 or a $20 call, because again, that's way the hell out from ATR, from the true range that it should move. So I'd be wanting to look at getting something very at the money or in the money, because it helps me out more, right? Once you're in the money, you start getting intrinsic value. So you start seeing your options become worth more quicker. Delta becomes higher. Theta becomes less. Like, once you're in the money, things start working in your favor when it comes to options. If you're out of the money, especially really far out of the money, as soon as it moves in the other direction, you start losing money very, very quickly. So I really look at things at the money or in the money when I'm playing things intraday that I'm not familiar with playing. So that's the second bit, third bit, I should say. So we got, first bit was what? Know your levels. Second bit was ATR and DTR. Third bit was, what did I just say?
In the money, at the money.
Yes, in the money and at the money. There we go. There you go. Thank you. And yeah, I mean, I started going through these the 50% bot room, the 50% stuff. These actually are really throwing out some pretty awesome results. Later on in the day, not so much, but early on in the day, they're pretty solid. Today, we'll go to the beginning. Yeah, that was CCJ at 937. Let's see, RTX, Myrna, and Guild. Yeah, I mean, that ended up going and somehow predicted that very early. It's because it opened around 9.2. Anyway, so that's really how I'm finding intraday setups. And then obviously, when you're looking at intraday, 15 and 30 minutes are really the time frames that you want to be looking at. Hourly gets a little hard because you want to have more than like 3 candles to be able to make an educated strat decision. We live and die by 3 candlesticks for the most part. So I would have been able to get in on a 3-1-2 reversal here on RTX at 11:30. That's awesome. I didn't actually miss. I mean, the move was clearly after 11:30 anyway, but I wouldn't have been able to get in on everything. I wouldn't have been able to get in on this until some point after 11:30 or so. And quite frankly, I kind of like my trading to be done before I go eat lunch, so I can do other things. So I really look at the 15 and 30, and then for the beginning of the day, I look at the 5 minute to try to find quick entry exit. something bouncing off VWAP, something, with a solid 2-2 reversal that I can make a quick buck on for, a 10-20% scalp, stuff like that. Yeah. So that's really all it comes down to on intraday. So set yourself up with a few tickers you like, right? Nightly, do your homework, go in and set the levels, so that you know where support and resistance are. You've documented your entry point. You've documented your entry points. You know what the ATR and DTR actually is. You, damn it, help me out. What was that last one again?
In the money, at the money.
Thank you. In the money, at the money. Those things. So, I mean, those are really what I'd be looking at for intraday. Okay, so I think those are the two topics I'm going to leave it with so that we don't go too long and the video doesn't take 9 hours to upload to YouTube. So are there any questions before we call it a night?
Yeah, I have a question for you. Hi, I'm new in your group. So my question is, when you set your levels of support and resistance, like let's say you're trading intraday and you want to do a scalp, what time frame is most accurate for you in terms of scalping? Would you say would the 5 and the 15 minute be the most accurate with your support resistance levels?
So when I set my support resistance, I really, first off, like I'll have my daily levels in there, right? So for my homework on RTX right now, I'd be going in here and doing this, and my next level will be down, here and here. So here's where I have a lot of support. So I'll probably go ahead and remove that first one just to be safe. Here's my entry point, right? The 8901. So now I can be looking at the next support to be 87, vice versa, going up this way. So once I see a lot of like lines really close together, I'm going to choose something that's either like in between or the higher. So like going up this way, I'd rather be safe than sorry. So that's really how I'm going to start things first off. 5. And then I'll remove that guy. So those would be my two entries, this line and this line. Then I have a pretty solid, so that's what I'm looking for first. I'm looking for a breach of my daily level. Now, why? Again, I'd prefer to be safe than sorry, and it works out a lot. The more prudent you are when it comes to determining where you want to enter, the better off you're going to be. You might miss the play today because, let's say, it did end up triggering, or it got right to be about 95.25. It didn't trigger 95.27. But it did definitely go 2 up, and you missed a dollar move ish, whatever, for RTX here. Well, that sucks. Well, tomorrow's another day, because there was a lot of resistance here. So now that I have my daily level set up and I'm looking for a scalp, yes, I'll be looking to enter on like a 5-minute. So again, like let's say maybe we got a 2-2 reversal right here. It's early on in the day. I don't have a lot of 15-minute candles drawn out. So, so I'll be still looking at the 5-minute. So I'll get in on a 2-2 reversal here. And at that point, my scalp, my scalp plays are a little interesting because I don't necessarily, a lot of people say, okay, I get 10%, I'm out. I get 10%, I'm out. Like that's how they're scalping. Mine are really, I'll let the play go. And I'll set a trailing stop loss and I'll just make it really tight. So in this case, if I have a trailing stop loss set to where if this drops, I'm in the money, I'm at 30% profit, let's say, I'll set a 10-cent stop loss, trailing stop loss. So if this guy goes back down like 10 cents, I still made a lot of money out of the whole deal. But I can potentially make more. So basically I'm trying not to leave a lot of money on the table in my scalps, but at the same time, I'm okay with getting stopped out for a gain. So yeah, 5-15 minutes really where I'll be looking to play some quick plays for scalping. But again, that does come down to your levels. So I don't really ever set. That was the second part of your question. I don't really set my levels based on 5 minutes because there's just way too many damn candles. So what I'll end up doing is setting, I'll probably look at like a larger time frame, like the 15-minute if I'm entering on the 5, and I'll set some levels. So let's say again, this was my entry point, the 2-2. So now I'll say, okay, well, number one, if I'm going to get stopped out, it's going to be the bottom of that candle. Now I have some, levels that I need to deal with here. So I need to be able to get through this candlestick, right? That's going to be some level of resistance here. So, okay, cool. I busted out of that. Still pretty bullish. So now I have some, well, there's, some built up resistance there. So we know those two are kind of combined in my book. So now I have some 90.72 resistance. Now my next bit is here. Whoa, I got quite a bit of room here. So that's something I'll look at and say, man, this play could really go. So again, when it comes down to how to set your stop loss, you could say, I'm going to let it play out, or I'm going to take my quick 10% scalp, 20% scalp, whatever you want, and then get out.
Got it. Thank you. I really appreciate that.
Sure. Anyone else? Awesome. All right. Well, tomorrow's Friday, Lotto Friday. So let's have some fun in the morning and do your homework. Look at the setups, the daily setups here.
Oh yeah, just reminded me. Do you do the 30 minutes still, the 0 BTEs, or do you have a lower time frame?
Like on Friday.
Yeah.
Man, so I really want to be out of things before lunch. On Fridays. Doesn't always work out that way. But I definitely want to be out. So I'm really looking at like the 5-minute and the 15-minute personally. But if I'm still in something after like 10:30, then I need to start looking at the 30 minutes. For a potential. If I should rephrase that, if I want to get into something late in the day, I'll be looking at the 30 still. But man, like I'm telling you, like the way the Greeks work against you on a 0 DTE, I would try to be out of things by lunch. That's just what I've personally found. Yeah.
Against me on Wednesday, so I know.
Yep. And I mean, again, like that's I guess the one thing I'll wrap this all up with. It's a good point. Give yourself a set of rules. It's really weird to say that, and I know a lot of people have said it, and you've probably seen it on Twitter, and a lot of other people say that same exact thing. But really, give yourself a set of rules. I mean, I can tell you mine. I have 3. I've decided that if I have too many rules, then I don't follow any of them. And my rules are simple. I have a rule that says don't be greedy. So, I mean, what does that really mean? Well, to me, that means that, if I'm sitting here and I am, being nitpicky over $3 or 3, pennies, I should say, I guess, with an option contract, like 3 cents, which, equates to some money. But like, if I'm sitting here being nitpicky, it's like, why am I doing that? Like, if I can get out right now, because I'm dealing with some resistance at 55, it's back, it's hit the high, it's come back a little bit, it's hit the high again, it's come back, and I'm sitting here and I can trade something for, if I can sit here and trade something for, 2 cents less and get rid of it, why? Like, do it, get out and like take the money and run, right? That's kind of what I mean by don't be greedy. Again, the way that I've gone through and done a lot of this is setting trailing stop losses so that I can be greedy if the trend continues in my direction without me having to stare at something. But like I said, in the scheme of things, if I'm sitting here and staring at something and I'm dealing with not being able to get to the 55-cent mark, what's $3? That's really the big one for me.
People taking either children, some will eat food, have their pets. It, it's difficult to watch, but this is what war ends up looking like, especially in the early stages where civilians just start flying cover.
So hard for me to hear that, but I think what you asked is this what the stock market looks like pre-war? Is that right? maybe.
I think you just had background on in the news or something.
Oh, okay. Yeah, I was sorry. I don't know what that was then. Okay.
Thanks, Godzilla.
Yep. All right, y'all. Well, have a good night. See you in the morning.